Hello and welcome to the last Gold, Ghosts, and Guns market report for 2018. It's December 30th. I'm Tom Luongo. You guys know the drill. Let's get right to it. I've got a lot to do today, so I'm going to try and make this short, but I've got some year-end charts for you, things to look for in the markets that are important to us for this year. So let's talk about what's happening in Syria real quick. There's been Putin and Turkish President Erdogan spoke yesterday about the situation now that the Americans are moving out. And a lot of horse trading is happening around who gets to control the city of Manbij, which is important strategically. The Americans would like the Turks to move in because they want their NATO ally in there. I think that's part of the deal that Erdogan and Trump brokered. Erdogan would like to have Manbij to use as leverage to continue to try and annex as much territory as possible, overplaying his hand, as he always does, playing his cards well, but overplaying his hand. The Syrians and the Russians would prefer the Turks not to move in at all. They want the Russians are committed to the territorial integrity of Syria. This is a very important phrase to them. They use it all the time. I firmly believe ultimately that no matter what you see in all of this, at the end of the day, what the Russians want here is what the Russians will get. And because quietly behind them stands the Chinese. And Erdogan stays in power at this point at the pleasure of the Chinese and the Russians, who are the only ones coming to his aid, who can come to his aid economically to keep his country from collapsing. And the lira is still incredibly big Achilles heel here. So Trump's going to pressure him on the one side to not let Iran and Syria and Russia gain maximal advantage out of this, but I don't think he's got a lot of leverage over Erdogan ultimately. I think Putin does, and certainly Xi, because at this point, the Turkish lira, as I've mentioned multiple times, is at the exists at this point at the pleasure of the Chinese, who are willing to open up swap lines to keep the country from imploding, because it would not be hard to push the lira back towards 7 or 7.5 and crush the banking system. All right, so that's that. I got charts, and so that's the real big issue of the day geopolitically. I think everything else doesn't really matter. The government shutdown is what it is. I like the fact that Trump is holding his water here. There's a really good article on Zero Hedge about John Kelly, his first interview, about why he's leaving the White House. I think it's instructional. I think it's instructive. I think you should read it. I read it right before I went live this morning. It gives you some insight as to what I think is happening in that, what was happening in inside the Trump White House as Kelly was trying to keep things under some semblance of order and structure. But he was very complimentary to Trump in a way that I didn't expect him to be, which is to say that Trump never made any decisions, according to Kelly, and he would know that we're not fully informed. His staff might have liked the decisions that he made or the conclusions he was reaching, and that would leak into the press as Trump doesn't know what the fuck he's doing. Pardon my French, but those people should be fired. Note, Kelly didn't say that on his way out the door, which I found very interesting. All right. And then I've got year-end charts for various stock markets, for a couple of different stock markets, oil and gold. And we're going to talk about all of those things in relation to where I think we're moving in 2019, and as a preview for what some of the stuff we're going to talk about in this month's Gold, Ghosts, and Guns newsletter, which I just started writing. All right. So, and I've got a lot to do today, so I really should keep this short, unfortunately. This is actually take 2. I did one of these already and somehow didn't hit the record button. So I'm already like 3 hours behind today. All right. Gold. I love the breakout here, the price action here from gold from last week. Note all the lows here, and I'm sorry about that. 2015, 2016, 2017, 2018. This low here in 2018 is lower than the 2017 low, which really confirms that this is more of a consolidation pattern than it is a new bull market. And once we hit this high here in March or so, it was pretty obvious that once we couldn't break through this 1350 area, and we had 4 attempts at it on a monthly basis and like 13 attempts on a daily basis, that we were just that gold was going to do this. It's just the question was where this low was going to come in, as long as it wasn't really below the 2016 low, which was the last major low. This 2017 low is not a major low. It's just a pause in a much longer bull wave. This 2016 low is more important. This 2015 low is incredibly important. I think it's the low for the entire bear market. Sorry. So here we are. This is a great performance in the fourth quarter, and it comes at a time of high political instability. What a shock. Gold responds to political instability. So looking at the quarterly chart, we see this. We see the year of political hell, and gold is all over the place. It starts out uninterestingly non-volatile in Q1, extending this weak rally, which then fails in Q2, reverses, 1 bar reversal here, and then we get a 1 bar reversal in Q4 as the political situation in both the United States and Europe across the board goes bonkers. And so retail and many people are starting to wake up to the fact that dollar liquidity is tight, but retail is looking for a way to preserve their capital. And that's what gold is telling you. And I showed you the chart of the gold and the euro. That chart's in full-on breakout mode, like 3-year high breakout mode. So any move, obviously, above 1365, 1375 in gold on a weekly closing basis, new bull market in gold going, and we're off to the races as to where we're going to happen. But what the question for 2019 is, where does it end? Where are we in relation to when we're going to get that? Is it going to be in Q1? Is it going to be in Q2? Is it going to be in 2020? I don't know. But tomorrow, for gold to close positive for the year, it needs to recapture 1306. So it's going to be $23 in the next, 24 hours. Absent a major geopolitical event, I don't see that happening. So gold's going to trade down for the year, but it's not much. It's, $20 over 1,300 in a very strange year. Not bad, actually. All right. So that's gold. Now let's talk about the Dow. So the Dow here, right? This up until this December, this was just consolidation of some of these gains. These gains are massive. I'm not surprised in the end we got this kind of volatility, given the political instability that we're seeing in the gold market and the bond markets and the major change in central bank policy and the fact that the Fed has to continue raising interest rates if it wants to have any prayer of staving off the worst of a pension crisis here in the United States. The Fed is trying to fight a pension crisis, as Mark Armstrong keeps saying. The Europeans are trying to stave off a sovereign debt crisis. And those two things are at odds with one another. The ECB needs negative interest rates, and the Fed needs 7% on the, needs 6% on the benchmark rate. 6-7% on the benchmark rate, which they'll never get. So now what? That's what's causing this. And at some point, the system breaks. And when the system breaks, gold's going to go ballistic. And that's kind of what we're beginning to see now. And that's kind of what we're seeing here. But the real question is, when the system really breaks, it's the bond markets that break. The equity markets should rally. So here's the Dow Jones from the quarterly perspective. This is a terrible bar. There's no argument here. This is a flat top and a falling bottom if you connect the lows and you connect the highs. This is basically just a big triple top here, and perma equity bears are talking about 15,000, and I'm like, no. And even then, it's possible, but that would only fuel a massive run higher, because at some point you have to realize that bargain hunting takes over. When I see U.S. blue chips trading at 5% yield, 6% yield, you're telling me that we're gonna see another 35% drop in the equity markets? So really, you expect the bottom here for AT&T to be trading with a 9% yield? AT&T, 9% yield. I boggle at anybody who makes that argument. That's an ideologically possessed person who's not looking at the situation. That's one of the problems with people. I hate to throw shade at people like Peter Schiff, who are ideologically pushing a position as opposed to looking at the freaking markets. Not possible. 20 grand on the Dow? Possible. 15 grand on the Dow? No. And if we hit 20 grand on the Dow, it'll be for about 14 seconds. Maybe 12. Before it reverses. We're already seeing people wanting to come in and buy here. So the big question for the Dow is coming in and trying to close positive for the year, and that's this number. So the Dow's got to rally 300 points tomorrow. Now that's very possible. $23 in gold? Not very possible. 300 points in the Dow? God, at this point, that's just Tuesday. So I wouldn't be surprised. The Dow closes positive for the year, and the DAX continues to do what it's doing, then the market has spoken as to whose political and economic situation it trusts better. I don't have the monthly chart for the FTSE, but I can tell you this. The DAX looks worse than the FTSE does. Both of them look much worse than the Dow, or the S&P, or the Russell 3000, the Russell 2000, sorry. The NASDAQ looks terrible because the NASDAQ is over-levered and valuations are insane, except for Apple. But as far as U.S. blue chips are concerned, no. So there's bargains to be had already in U.S. equities. What the difference between the FTSE and the DAX is telling me now is that the market is beginning to handicap a hard Brexit, which is not something I would have expected. But the market is beginning to handicap because at the end of the day, the Germans are going to be hurt worse by a hard Brexit than the Brits are, which is why the Germans are fighting so hard to stop Brexit from happening. So the market by selling the DAX harder than it's selling the FTSE is telling us that at this point they're handicapping a hard Brexit, that the Germans can't stop it. And if that's the case, then you're going to see another 20% come off the DAX. Because at that point, the rules under which the Germans do most of their trading, changes. And that means the current valuations aren't reality. And that, that same thing I said about, AT&T trading at a 9% yield. Well, Siemens is going to have to, or BMW are going to have to completely augment or completely change their cap structure, their cap table based on different sales, just a different, a different sales environment. And their forward PDEs are going to drop like a rock, or are going to rise they're going to rise. Their forward PDEs are going to rise, and the stock's going to have to commensurately drop in price. That's what I'm saying. That's what the market's telling me right now. Okay. So DAX underperforming the FTSE, both of whom are underperforming even the weakest of the U.S. equity markets. And gold is starting to move higher. So if we get a spike bottom here in the Dow and we get a rally in gold and a rising dollar, that's your sovereign debt crisis. All right. Let's talk about Brent crude, because Brent crude is important to us, much more important to us than WTI. From a portfolio perspective, for those of you who are listening to this, who don't subscribe to the newsletter, then Brent crude. But Brent is a better proxy for the global oil market than WTI is anyway, and therefore it's always, from my perspective, the thing you trade and the thing you look at geopolitically. So we had a huge uptrend in oil over the past 5 quarters. Again, like the downtrend in gold, just the longest one we've seen in a long time. And that, I think, was unbelievably unsustainable. And I think the market just hit the big red history eraser button and said the shiny candy-like button and pushed reset on oil prices. And maybe there was some geopolitical stuff going on here, wanting to punish Iran, wanting to punish Russia or whatever. on the part of, U.S. banks, pushing the price of oil down, or it's just reality taking over, and that really anything above $60 was always fiction anyway. So, or 60, $65 anyway. I don't think that oil is sustainable below $45 a barrel, really above $40 a barrel here in the United States. So you can't push this. You can't get much more blood from this stone, honestly. Could I see, $35 in WTI again for 12 seconds or so? Sure. Like this spike bottom here. I was watching the markets that day. I was trading the markets that day. I got news for you. $29 in Brent on Brent crude did not last very long. Okay, so same thing with the Dow. If we get a climax and panic over the course, and I think it'll happen over the course of the next 3 weeks or so at most. If we could see slightly lower lows in oil and possibly a retest of the Dow, the previous low in the Dow from the Christmas Eve low, but then I think everything starts to stabilize as people kind of look at the situation. We're into a new year. There's no more tax loss selling. There's none of that stuff going on. There's just people going, okay, now there's bargain hunting happening. So sometimes this stuff happens in January, and sometimes it happens in late December. So there you go. I think it happened in late December this year, but I could be wrong. So keep your wits about you. Timing is everything, and just wait for the right moment. So if we get a close on the Dow above, if the Dow closes positive for the year, that's a really big tell. If oil prices begin to stabilize in this $50 to $53 range, $55 range in Brent crude over the course of the next couple of weeks, the panic is over. It'll subside. It may not rally, but that's fine. At least the panic is over. And now we have an idea of what we're looking at for 2019. All right. That's what I've got for today, guys. You guys have I just need to get out of here. I've got a ton to do. So I'm going to go do that. You go do what you have to do, and please enjoy your New Year's, whatever you plan on doing. I'm having a couple of friends over, which is rare for me. I'm never usually at all social on New Year's Eve. All right. So you guys take care. Be good. Keep your stick on the ice.